Hey everyone, and welcome. Today, we are diving headfirst into the world of financial markets. I know, it can sound pretty intimidating, right? But trust me, with the right map, it's really just a landscape full of incredible potential. So let's get started. Seriously, just take a second and think about that. You work hard for your money, but is it working for you? Or is it just kind of sitting there in a savings account, maybe earning next to nothing, and probably not even keeping up with inflation? For most of us, that's the reality. It feels safe, sure, but it's definitely not growing. And that's what this is all about. We're going to explore how to get your money off the sidelines and into the game. The whole idea here is to give your capital a chance to grow, to generate an income, and to build some real wealth for you over time. So let's kick off this adventure by really understanding the terrain. The stock market isn't some scary casino you should be afraid of, not at all. Think of it more like a massive, global network, a whole world just waiting to be explored. So what is it really? Well, at its heart, the market is just a huge system that connects your money with opportunities for growth. That could mean buying a piece of a company and sharing in its success, or maybe collecting regular payments called dividends, or even just protecting your savings from getting eaten away by inflation. Okay, now any great adventure requires some prep work, right? You're not going to climb Mount Everest in flip-flops, and you definitely shouldn't jump into the markets without a solid plan. So, let's go over your first 5 absolutely essential steps. Think of these 5 things as your non-negotiable gear. First, and this is the big one, you have to educate yourself. Knowledge is your best tool and your best defense. Second, you've got to choose a style that actually fits you, and we'll get into that in just a second. Third, pick a brokerage. That's your gateway to the markets. Now, step 4 is so important. Practice with paper trading. This lets you use fake money to learn the ropes without any real risk. Then, and only after you're doing well there, do you move to step 5, starting small with real money you're actually prepared to risk. Trust me, you don't want to skip any of these. So, that second step, choosing your style, is one of the most important decisions you'll make. It's kind of like choosing your character in a video game. Are you going to be the long-term investor, patiently building your strength over time? Or are you more of an active trader, nimble and quick, looking for those short-term wins? And here's the biggest difference between the two. Investing? That's a marathon. You buy something solid and you hold on to it, letting the incredible power of compound interest do its thing over years. Trading, on the other hand, is a series of sprints. You're in and out of the market way faster, trying to profit from the little ups and downs along the way. This chart kind of breaks it all down. You can see right here, long-term investing has a time horizon of years, which usually means lower stress, and your focus is all on that beautiful compound interest. Then you've got swing trading, where you're holding for days or weeks. Stress level goes up a bit because now you're focused on market moves. And finally, there's day trading, which all happens within a single day. That's high focus, high intensity, and, you guessed it, high stress. So the real question you have to ask yourself is which of these actually lines up with your personality? All right, let's say you've picked a path. Now we need to have a serious talk about the treasures and the traps, because every adventure has amazing rewards, but it also has some very, very real dangers. So let's get real about expectations. And this is the first, most important reality check of all. If you choose that active trader path, you are almost certainly going to lose money when you start. That's not a failure. Think of it as the tuition fee you pay the market for your education. Every single expert out there was once a beginner who paid that fee. So what's a realistic treasure to aim for? Well, for the passive investor, history gives us a pretty good benchmark. The S&P 500, which is basically a basket of 500 of the biggest U.S. companies, has historically returned an average of about 8 to 10% per year. This is the slow, steady, and proven path to building wealth. And this chart really shows the difference in how you think about time. The passive investor, over on the left, is aiming for that 8 to 10% gain over an entire year. But the professional trader on the right, they're playing a much shorter game, targeting a smaller percentage, but on a monthly basis. So, what's a realistic goal for a pro trader? Well, after years of experience with really tight risk management, a skilled trader might aim for 2 to 5% per month. But let me be super clear here. This is not a beginner's goal. This is the result of a ton of discipline and hard-won expertise. Now, you might be thinking, okay, but what if I build a skill, but I don't have a lot of money to start with? Well, for advanced traders, there's something called proprietary trading. Basically, these firms give you their capital to trade, and in exchange, you get to keep a huge chunk of the profits, often 80% or even more. It can be an amazing path, but, and I'm going to say it again, it's only for proven experts. Okay, we get the different paths, we get the potential outcomes. Now let's pull out the world map. See, there isn't just one single market. There are a whole bunch of different realms you can explore, and each one has its own rules and its own personality. Let's do a quick little tour. First up, you've got stocks. This is the one we all know. It's just buying a tiny piece of a company, like Apple or Tesla. Then there's Forex, or FX, which is the 24-hour market for trading currencies, like the euro versus the US dollar. Next are options and futures. Now, these are more advanced. They're basically contracts that let you speculate on where prices are going or hedge, which just means protecting your investments. And finally, we have ETFs. Now, these are fantastic for beginners. An ETF is like a pre-made basket with lots of different stocks inside. Buying just one gives you instant diversification. It is a great place to start. Look, if you only remember one single thing from our entire discussion today, please make it this. Your success in the markets isn't going to be defined by how big your wins are. It's going to be defined by how well you manage your losses. In a world where there's no ceiling on what you can make, risk management is the only floor you can build for yourself. It is your number one job, period. So, we've covered the landscape, the prep work, the different paths you can take, and the potential treasures and traps out there. The map is officially in your hands now, and the only question left is the one you have to answer for yourself. Where will your journey begin?